what if I can borrow for myself, pay off my credit card debt, eliminate my debt of my interest for my payments, and at the same time, I could be able to pay back myself little by little. So little by little, you can pay back yourself, being able to pay off your debt, and then at the same time, you still have your policy. You're still leveraging that, right? So that's a really unique way that most people don't understand when it comes to finance and when it comes to actually leveraging insurance so that their policies can also help them with their debt.
Hello, everybody. My name is Danny Parrott, and I am here with Nekei Lewis, the CEO of American Dreamers. I am the Health and Wellness Chair Arm for American Dreamers. And Nekei, I am very happy to have the opportunity to interview you and ask you some good questions. So, you ready to go?
Absolutely. Let's do it, Danny.
All right. So, I got a couple questions here for you today.
Yeah.
Talking about life insurance. So, understanding life insurance. What are the main types of life insurance and how do they differ from one another?
That's a great question, Danny. So when it comes to life insurance, there's actually two types, right? There's term and there's whole life. So with term actually expires. So meaning whether it's 10 years, 15, 20, or 30, you can normally get life insurance for a specific period amount of time. Normally people get term insurance when they want to maybe cover something like a mortgage, or you want to be able to get a lot of insurance really, really cheap, right? So that's a little bit on the term side. And then when it comes to whole life, now whole life, right, is actually covers your entire life and it doesn't expire. Unlike term, it expires, right? So a lot of times people think, well, hey, I've got insurance, I'm good. But when you really look at the policy, it's actually going to expire. And then with the whole life can cover your entire life until you live up until 125, right? And as long as you pay your premium, you'll have insurance.
Perfect. Okay. All right. So let's go over the importance, right? What is the importance, right? Life insurance is considered essential financial planning for individuals. So let's talk about that a little bit.
So a lot of times I would say when it comes to life insurance, this is one area where people look over and they feel like, oh, well, it's not that important. I have time. But here's the thing. When it comes to insurance and when the insurance companies are actually looking to see from your background, from your health background, what medications are you taking? If you've been to the hospital, if you had any accidents, all of these play into your actual cost of insurance. So if you want to pay a higher insurance, believe me, you're going to, especially if you have a lot of these things. So the sooner that you can get your policy, the sooner and you can get the most insurance that you can get, you actually have the opportunity to gain where you can pay a cheaper rate. Because guess what? The insurance companies know that, hey, if you're not well, you have a lot of different, complications and disabilities, that's fine. They'll accept you, but you will pay a higher premium because of the risk. So when it comes to risk, you want to minimize that for yourself and your family because at the end of the day, it's about legacy. And you want to be able to leave your family with a legacy and you don't want them to, be able to be like, well, my family member never cared about me. They didn't even leave me a policy, right? So I think when it comes to importance, it's really important that we talk about generational wealth and we talk about the importance of making sure that, God forbid, tomorrow something happened to you, your family be taken care of.
Then, you don't have to do that GoFundMe.
Yes.
That's something that happens a lot.
That happens a lot. Unfortunately, a GoFundMe is very, very familiar, especially in our industry. And, the cost, especially on the funeral side, right? So most funerals, they can be anywhere from $15,000 to $35,000, depending if you want to be cremated or if you want to have a regular burial. So what we want to be able to do, especially for those individuals, is say, hey, you know what? We're going to set up a policy for you. We're going to make sure that your family doesn't have to pay out of pocket for that. Because most people, and I'll give you guys a tip. So most people think that, hey, when it comes to my insurance, I'm good, right? They'll get the money. No, you still have to be able to put actual policy in place that's going to expedite that funeral remains, especially for at least 48 to like 72 hours, because most policies take 60 to 90 days to get paid out.
Wow. I did not know that. That's incredible. Man, so how does somebody determine the type of life insurance or the amount of life insurance that they're going to require?
So for me, especially as an agent, I'm a licensed agent in all 50 states and I work with all the top tier companies. What I'm going to do is literally I shop around to all the top carriers and see based on your health, based on your weight, your height, all of these things, and also what kind of legacy you want to leave, right? And I will take all those considerations of what companies will be best matched for you. And then what I'll do is I will go ahead and create a plan, especially as an agent, because a lot of times there's so many different policies. Like recently I did a review for a client and the policy was not exactly what they thought it was, right? Because sometimes we think, oh, yes, I have coverage, but then you have a different type of coverage. There's several different types of insurance. And a lot of these policies that people were sold like a couple years ago, like few years ago, like think about your great grandparents and stuff like that, they've changed things. Just like everything technology has gotten better, so has insurance.
So there's a lot of common misconceptions and also myths when it comes to life insurance. What are some of those that you've encountered and how have you debunked them?
Oh, yeah, I love that question. So a lot of, like I said, a few of the misconceptions, like I said about is the funeral planning. So they think, well, okay, I have a policy. Well, no, just because you have a policy doesn't mean it's going to pay out for the funeral, right? It's not going to pay in 48 to 72 hours, right? So a lot of times people think that. Or they may have a term policy and they think it's going to cover for their whole life. But guess what? It covers for a certain portion of it, right? But then what happens is after that time, it actually doubles. And every year the price increases tremendously if you don't cancel it. And sometimes people forget and you could be hit with a really crazy bill. So that's one. Another one is the accidental like policies. For those type of individuals, it serves its purpose. But here's the thing. When you get those cheap accidental policies, you ever seen those things on you get it from the Facebook? They're like, oh, $1 for like 100,000, right? Yeah. $5 for like $1 million, right? That's an accidental policy. Most people don't know that. They're going to tell you that, right? So guess what? You literally have to pass in a moving train, on a plane, while driving. Like it's so specific that most people think no, I have insurance. No, you don't.
So you got like getting run over by train insurance.
You literally got to be on the train and it's got to be ticketed. Like it literally specifies that. A ticketed plane or anything like that, right? And then you think like, oh my God, so I thought I had insurance. And imagine you're in your bed, oh no, you're good, you got $500K. And then your family goes to cash it out and guess what? You don't have anything, right? So that's the most depressing thing that could happen, I think, to families. And a lot of devastating American families think they have insurance. And that's why, as part of American Dreamers, I want to review your policy. I want to see what you have. If you're good, I'm going to say, hey, you know what? Your other agent did right by you. You're good. If there's somewhere I can add benefits to that, great. Most Americans should at least have, and that's another myth. They think, well, I have one policy, I'm good. No, the average American has at least 4 to 5 policies.
Oh, wow. I guess that's something that people should be considering. Are there any other things that people should consider when they're looking for beneficiaries for their policy? Because, people want to take care of their kids and they would like, what are those things that they should be considering? Well,
a beneficiary, most people don't know, is pretty much who do you want your policy to go to? So, for example, whether you want your policy to go to your children, you can have your policy go to your business. People can have business insurance. You want to go ahead and have your policy go to a trust, right? It doesn't have to go to your family. If you think your family's going to waste your $1 million, don't worry. They may, right? But guess what? You could put up a trust, right? And we can help you do that. Set up your life insurance trust, put the money in there, and then designate exactly how that's going to be spent. So that means if your children are too young, right, and you want to go to your child, you can set that up. And then you could say, you know what? This person could only go and take this money out if they're going to let's say education, right? Or if they're going to go to college, they can do it if they're going to take, a car. But any other requests, Lamborghini, denied. Anything else, shopping, denied, right? Unless you could put, I'll put like $1,000 for shopping just so, little Johnny has his clothes. But I'm just saying, so you just want to make sure that you set things up accordingly.
So you can be very specific and precise with what is going to happen with the money after you're gone.
Yes. Absolutely.
So I know this is something that I've heard before, and I would like some more clarity.
Okay.
When it comes to life insurance, there's these things called policy riders. What are they? What is that?
Okay, so great question. So when it comes to policy writers, a writer is specifically, you'll see it on your policy too. It's spelled RIDER, just in case the individual's trying to know exactly how that's spelled. And a writer is basically an add-on, right? So there's different add-ons that, your agent could put. However, most people don't know is that it does increase the cost of the policy, right? So depending on the writer, sometimes let's say if you get sick and you can't pay your policy, there's riders, like guaranteed riders you can put that the policy will not basically cancel just because you're sick, right? It'll have a specific amount of time that you can maybe get better, especially for people who are working, or if you're out of job, you don't want your policy to cancel because you can't pay it. You can add those riders. So, always ask your agent, hey, what are the riders that I can have to my policy just in case? Sometimes there's accidental riders that you can add really, really cheap. If you can afford it, go ahead and add it, right? There's also long-term care riders. So what most Americans is that the average Americans, we really don't have the policies in place just for long-term care. So long-term care includes nursing home, right? If you need special care at your home, and as you get older, you're going to need these things. So actually in your policy, you can use life insurance while you're alive. Most people think that, hey, you know what, I only can use life insurance only for my family when they pass. No, you can also use it while you're alive and have the long-term care rider to take care of you long-term.
Interesting.
Yeah.
Interesting. So when it comes to